June update for the state of the market for Nashville real estate in May 2024. I'm going to be going over some stats. It's a little bit counterintuitive. So I think you'll find this really interesting. Let's jump in. So again, state of the market, May information for the Nashville real estate market. So first off, Davidson County, we go over Davidson-Williamson County. Median price hit another all-time high of $488,000. Again, that's a median price in Davidson County. That is totally counter to what people would have guessed or expected a year ago when rates were already, at 7%. I think a lot of people, especially online personalities, were calling for, 10, 20, 30% drop in real estate for reasons that I guess maybe they were just trying to get clicks on the videos. Even the logic at that point didn't make sense, but that's what some people were saying, that the real estate market was going to crash everywhere, and Nashville was no different. Well, fast forward to 12 months, here we are, June of 2024, and again, some of these stats are really counterintuitive. The first one, like I just mentioned, 488 all-time high. And over the past 5 straight months in Nashville, median price has increased. So it's not a blip in the radar. This is a steady thing. Williamson County median price is up about 7% year over year. Davidson is up about 10%. So historically, a healthy rate would be anywhere from 3 to 5, 4%. You probably know real estate markets do go up and down slightly. Hopefully over time, they're pretty steady, and 4% is a healthy growth rate. So to see again, Davidson County at 10% and Williamson County, up slightly over 7% year over year is it's counterintuitive, and it's different than a lot of people expected. So this is where we are. Closings are on par with about what we had this time last year, which is significantly less than what we saw in, say, 2021. We are at record lows in terms of number of transactions. And I think until interest rates begin to ease down, we're probably going to see pretty low transaction numbers. And in a moment, we'll get into kind of what we can expect with interest rates going forward. Days on the market in Williamson County is 6 and 10 respectively. So very fast. Always worth noting, these are for the homes that are selling, homes that are way overpriced, either way overpriced or maybe the condition. The sellers just didn't take the time and energy. Maybe they didn't have the time and energy to put into preparing the home to look its best. And those are overpriced, so those are not going under contract. The homes that are going under contract are doing so in about 2 weeks or less. Rates have actually been very stable over the last 12 months. That was not the case the prior 12 months to that. They have been essentially around 7%, give or take, 0.2 of a point. So very steady over the last 12 months, and inventory is relatively flat from last month, and it's steadily increasing, slowly and steadily, with one exception, and that is over $3 million. So the demand continues to outpace supply in Davidson-Williamson County for homes under $3 million. So what that means is the inventory over $3 million is now in some areas up to 9 months, and a lot of those homes are sitting on the market. And so I think if you ask yourself, what is the opportunity? There's opportunity in every market, and the answer to that question at the moment would be, one of the opportunities would be for a buyer that was buying above $3 million. I think that there are opportunities to get really good deals out there right now. And so I think that is the most obvious opportunity. Obviously, that's a high price point. If you're there, I think there's opportunity. So that's that. In terms of the data that the Fed is seeing, it appears as though they are beginning to get information that is making it very likely that they will make a rate reduction in September. What is the likelihood? We'll see, but one of the dates that we're really looking forward to is next week, June 12th. It's a Fed meeting. They'll talk about inflation, and hopefully we will get some more insight into how likely that is in September. Our team here at the Health and Real Estate Group, we track, what the board members of the Fed are, kind of what they're saying and what their probability is of rate reductions. So that is the state of the market. It is totally counterintuitive, and I think very different than what a majority of people would have guessed 12 months ago had you told them that rates are going to be at 7% over the next 12 months. And I think that we have probably hit a ceiling. I mean, we haven't touched 8 ever in the last, well, I don't want to say ever. We haven't touched 8 in the last several years. I don't even know that we touched 7.5 for more than maybe a week or two. Again, they've been very steady around 7. The hope is that ultimately in, somewhere in 2025, that would be probably closer to 6. And again, I think the lower they go, historically, statistically, a lot of buyers begin to enter the market. The lower the rates, the more the buyers. So that'll be interesting. It'll also be the lower the rate, the more people are willing to sell that are currently not really into giving up a 3% rate for a 7% rate. But I think even the difference between 6 and 7 can make a big difference. So that's the state of the market. Very counterintuitive. If you have any questions that we can be a resource to you for, always reach out anywhere where you're watching this video. Appreciate your time in watching it, and hope it's helpful. We'll see you on the next video.